Okay, hi there, guys. Very good morning, good afternoon to all, and welcome to Bretton's Financial Trading Academy's Monday's market outlook or the market preview for the week ahead. So, welcome. Hope you guys have had a good weekend, and we are ready right now for a webinar, but also to tackle the whole week with trading opportunities as well. We'll be looking at the USD Jpy, GBP and ZD and GBP AUD gold as well as what you've mentioned, Alfred. But most importantly is to look at where we are at first. The most important thing is what's the trend situation, what exactly has actually happened for the past 24 hours of trading, especially when the market has actually opened in Asia, Australia, New Zealand, as well as of today. So one of the biggest thing to actually know is it's about how there is an imbalance at the moment with regards to all the stocks, and Dow Jones, S&P 500, they hit record high last week as well, closing last week very, very high. And basically there's a mismatch at the moment, all that going positive and high, but then the Fridays, the April, the NFP was not really that high. It was reasonable, but it was not as high as expected. So there's a bit of a mismatch with a collection of data releases in the US, especially. Okay, so they are not as positive as the results of stocks and everything else that is going positive. So there is two scenarios. There is the scenario of a reflation, and there's a scenario of hyperinflation. So this is basically what's going on, driving the markets up and all that, which is good and not so good. The good thing is that we may be able to ride a lot of trend this week, and that would actually be driving volatility, liquidity. So we will see a lot of movement, a lot of waves in the market, a lot of waves, a lot of price patterns as well. So a lot of opportunities. But with opportunities, the not so good side of it is the risk side of it. So you will be riding, especially traders, us, me, and everybody else would actually be riding on both opportunities and risky trades as well, because we've got volatility involved, and that can actually make sudden turnings as your how you call that, reversals. So the reversals would actually be a little bit more sudden, short, and more frequent as well. So timing is everything in this kind of market condition. We want to be very sure with our timings. Okay, so timings is one of the most important thing in this kind of market condition: timing of entry and timing of exit, and also your timing and frequency of your trades. You know how you need to really layer down your trades with smaller pips, but then more frequent entry as well, and more careful with regards to leaving your trades open for your stop losses and all that. So you need to have stop losses in this kind of market condition. Lots of opportunities, but a lot of risk as well involved. So you want to not get yourself stopped out. You know, you don't want to get yourself stopped out at a level that you cannot afford, or a level that you have not planned. So getting stopped out is well and good, because it's actually, if it is part of the plan of your stop loss level, then it's okay. But if it is not planned and you don't have a stop loss level, or you keep increasing that stop loss level, then it will actually be very, very risky at this time, because of the market liquidity and volatility that we actually have. So what I've actually noticed as well is that besides all that thing that's going on in Dow Jones and S&P 500, US stocks and all that's going up and stuff like that, or going up, and you know, whether it's a correction at the moment or not, we don't know that yet, but it's driven by what I've mentioned, hyperinflation and also reflation scenarios. So as of today, most important is to know the right piece of information and news, so that we can actually apply it onto trading for today onwards. So this is important. Now, what I've actually noticed from news, not so much on British on UK news so much, but then I think the market is getting ready with some important data that we will take a look at the economic calendar as well. On the government Bailey in the UK will actually be speaking twice. I think it's on a Thursday, on a Wednesday and a Thursday as well. And then they've got their GDP numbers and everything else. So there's a lot that has maybe been priced in or not. I'm not sure, but then it is creating a lot of interest for GBP pairs. So as you can see, it's a really active, both JPY crosses, JPY pairs and GBP, but in particular GBP pairs as of today, both Asian session and also European session. When you see that nice flow from Asian session and then it is similar in the European or expected UK and US session, then it's actually quite a good thing to pay attention on that on GBP crosses. So when I check the top movers as well in Action Forex, I've realized that loads of interest has actually been onto GBP. So a lot of GBP buying has actually taken place since very early in the Asian session today. So there is no match of exact high impact news in the calendar as of today, but then we see that there is a lot of interest in GBP. So traders and investors are knowing something at the moment. They are putting their money into GBP pairs, GBP crosses. So I think it's probably best for us as well to focus on GBP pairs today. Yes, of course, I will give you the link for early Forex warning. So let me just give it to you right now. Yeah. Okay, so we can go here and give me a second. Let me send to everyone as well. So you guys can easily subscribe. I think it's only about 10 euros per month or 90. I'm not sure actually. I don't know about whether they have changed their prices or not, but it's really low per month. But if they require a code, you just put in my name, Kenny Simon, on there. Okay, so okay, that would actually help. Okay, so this is what I have observed: GBP pairs and also JPY pairs. Now, if we go down a little bit more, I don't see that similar type of excitement and flow in other pairs or other crosses. So mainly JPY and GBP crosses. So I would like to go into it a little bit more on GBP pairs. But before that, let's go on to Action Forex as well, just to show you basically, I would like to write the trend of liquidity and volatility as opposed to just picking a pair and trade that pair, because we want to trade what the big boys are interested in, because they are creating the trend and they would actually keep us a lot busier and a lot more liquid, the market, for that pair, in order for us to actually trade in a marathon manner. So that means we've got a longer type time period for us to actually trade, exactly like how you have seen on CHF JPY, for example. This has basically been planned from the time that I have noticed there's a lot of liquidity, a lot of interest as well. So it's the same time. So it took A to B, for example, took about 20 days. So even in that C to D, I'm also expecting about 20 days or so for it to materialize, and I've seen that steadily picked up in terms of liquidity and volatility. So I see the similarity in certain pairs as well, when we have actually spotted all these what do you call that, volume of trade and liquidity. That actually means that there is power in the market. Okay, so yeah, that's good. So we've got several other pairs I see that can actually mirror how we have actually traded for the CHF JPY, which is a brilliant trade. And usually this is how I personally trade, is to actually ride along very big patterns like this, and I just leave it on, and I don't actually plan any further. The moment I've actually put in all the take profits and stop losses and entries and everything else is just once, and I don't check it at all until it hits all the TPs. If it at all hits all TPs, then I check my trade only at the end of the month or until all of it closes. So I have also an alert that through my personal managers that will actually tell me that if it's all hit and that whole TPs has actually hit, then they will inform me as well, or I'll be sent a notification. So this is probably one of the best ways to also treat trading, because it will actually relieve a lot of stress from you as an individual as well, not only as a trader, because you've got many roles to play in your daily life. You've got your family role, you've got your work role, business role, trading role, friendship role, many things. So it's probably best to have some parts to go either auto completely or semi-auto as well, so that you can actually relieve the time to actually monitor it too much, you see. So in order for you to monitor less on a trade, it is very important to actually ride along a very mature trend or a maturing trend that can actually go on for longer. And then we need to monitor it less. If it's got a lot of catalysts, it's got a lot of push into the market by the big boys and all that, then we know that, okay, we can monitor it less, and we just need to be aware that the market is feeding into that trend. That's it. So as we can actually see on Action Forex today, on the daily chart itself, the good thing is that I like it when we see that we've got 4 dots here. So we've got 4 dots in many pairs today, as opposed to other days. So this is a very good sign, that we've got liquidity at the Forex early warning website. On that signal as well, we can see that we've got GBP pairs that has a lot of liquidity and volume, a lot of interest as well, a lot of buying interest as well. So then when I look at this Action Forex one as well, it just confirms that we've got a lot of GBP interest. So out of 10 top pairs today, you see GBP everywhere. So it is hinted to us that the market is concentrating on GBP pairs. So we as traders should also follow suit. We should also do extra due diligence and, just to know a little bit more about which pair, which GBP crosses as well, because we want to ride onto that trend and that opportunity for today. So the first one on the list is a GBP JPY, which is a very good thing, because JPY crosses is the next one on high in liquidity when it comes to here. So when we look at all the JPY crosses, it was positive on the other currency. That means JPY is really weak. So JPY is really weak on the sell side. GBP is really strong on the buy side, but then it's driven by liquidity. So this is good. So GBP JPY would actually definitely be on my list, maybe the first one on my list to actually look at, because the heat map is screaming opportunities to us, but not buy sell opportunities straight away as a signal. The most important thing is to actually know that it is liquidity and volatility signals first, then trend direction signal, because the trend direction signal can actually change at any moment of time. The liquidity and the volatility side of it may actually remain, but then the trend direction would actually change, because at this moment of time, let's say, for example, you see a lot of traders, investors are buying the GBP, but touch wood, something happens in the UK that is maybe act of God or something that people have got no control over, let's say, and that is a negative thing, and then that would actually just reverse and change that straight away. So hence the reason, in a high liquidity, high volatility type market, you don't want to get overly excited, because the overexcitement will actually go into greed factor, and then the greed factor will actually go into overconfidence and over trading. Then what if something happens at that time? You have already opened too many trades, for example, or too big lot size, because you think that you've already could cover all your profits that you generated. So you get overconfident and overexcited, let's say, then something happens, then it will wipe it all out. So that's why overconfidence that drives towards a little bit of the greediness factor is more dangerous than the fear factor. Okay, so this is number one warning. That's why it's not that I would like to burst your bubble of excitement. It's just that we as traders would really need to have that balance in terms of checklisting things and not actually feel too much on all the emotions and pay too much excitement, pay too much attention on the feelings when you're actually trading. You need to pay attention on your checklist, on the things to check and the things to check on the risk side of it. That's the most important thing. And that would actually then help you be very consistent. Okay, so here, for example, as you can see, it is actually matching with what we see on the action Forex, especially on GBP. So let's focus on the GBP crosses as of now. We have got the top three itself are GBP crosses. We've got a GBP paired with the JPY, with the CHF, and also with the Euro. So that's really good, and I like to see that as well, because we've got upcoming really more bigger news, bigger data releases, higher impact as well for GBP coming. So but why now? Why traders, investors are actually already into GBP trade? So there must be something else that we don't know about, but we want to be very aware of it, and we want to know that we too could actually ride on it today. Okay, so on GBP crosses especially. So this is what I want to take a look at, and let's also take a look at the currency heat map on action Forex before we dive straight into the charts. Here, as you can see, all the other pairs are super strong compared to the JPY. So JPY is going through loads of weaknesses, I would say strongly bearish. And then you can see GBP, lots of other pairs are comparatively weaker than the GBP. So again, this one here, this heat map matches with what we have actually seen in the other areas, right? So then we can see that USD really weak against GBP, very good. So you've got another pair there. You've got your GBP slash USD as well. So that's another, that's to actually prove that the GBP crosses is still, something that we need to really jump into. So JPY onwards, what is clear with JPY crosses would actually be both GBP as well. So GBP JPY, definitely want to look at GBP JPY today, GBP CAD and GBP AUD. So GBP CAD, GBP AUD. So it's also important for us to know that when we combine it with the other pair, has it actually been impacted as well by certain news? So like AUD, for example, if we check the calendar today, just before the calendar, let me just finish what we're doing here. GBP USD here. Okay, everything's done. So now I've just got 4 pairs that I have listed down right now, and this is following what's going on right now. So GBP USD, GBP JPY, GBP CAD, and GBP AUD. So this is most important for today, and then we can go to the other pairs as well. If we go on to volatility, we can also check specifically with GBP and JPY pairs, which other currency, if you combine it with, would actually bring you most volatility. So here, it's giving us a bit of an idea based on the daily chart. GBP against CAD seems to be most volatile. So I'm just going to write that down as well. And then let's check JPY pairs on 4-hour and daily. And we can see JPY CAD, so CAD JPY. So CAD, I'm just going to write that down as well as an extra pair, highly volatile. Okay, so that's interesting. We've got Canadian crosses versus the GBP and versus the JPY to be highly volatile. Perhaps, or maybe we can actually find opportunities there as well. Especially when I say opportunity, I meant when we go onto the chart and we can then confirm the trend is really clear on multiple time frames. We can maybe see a very clear pattern as well. Then it's actually an opportunity. Then we plan ahead and we basically have its TP, the right TP, right entries, right exits, and right SLs as well. Okay, so I think that's basically it for now on this side of it. Out of the chart, we will get into the chart shortly. Just another tool right here on action bias, which is in action Forex itself as well. We can see that the colors are looking quite good in terms of all the rows and all the columns as well. You can see we've got GBP JPY for sure. It's all on the positives, all on bullish on all four columns, 1 hour, 6 hours daily and weekly, which is really nice. Let's see the rest. We've also got first three right up to the daily. Also, again, another GBP cross GBP USD. So it's screaming at us at the moment on opportunities revolving the GBP. So that's good. So now let's get into the pair. Just before we get to the pair, I just want to go through what we have actually gone through last week, but just very briefly, I'm still monitoring the CHF JPY. It's proven to be a really beautiful trade, beautiful pattern that has been spotted weeks and weeks ago, but then it has just followed through and pierced through all the obstacles and hitting 3 TPs already. We've got 1 TP on its way, and that is actually just about, let's say, about 10 to 12 pips more to actually hit our 4th TP. So we've got 1 to this area, 1 this area, 2 this area, 3rd TP here, and 4th TP there. Each TP is about 30 pips in profit. So it has done really well. I mean, other traders have actually done probably much more than it, but they have actually left it on and not actually have any barriers like this drawn out. But it's just my conservative approach to the market is to actually layer it out and to actually have it's not about the amount of TPs that can actually be achieved. It's about the amount of risk that you can afford as well, because you need to mirror the amount of TPs that you expect to hit with your expectation of the risk side of it. So if you expect 30 pips there, right there, then you have to ask a question on whether or not you're willing to risk 30 pips as well. And if you're willing to risk 30 pips as well, how much are you willing to risk in terms of per pip value? So if it's 30 pips, then you are risking only $1 per pip, your trading is 0.01, let's say, then you need to understand whether or not it is to your benefit to risk $1 per pip, and that will be $30. So at that time, you're willing to risk that $30, or at certain time to risk that $30 on top of what you're already risking. So that's the question that you need to ask yourself and decide on that. Okay, so there you go. So, we have written that really nicely, and the way I evaluate as well, to understand how far it could actually go by when and all that, I evaluate it by the number of candles on A to B, the number of pips as well, and average number of days that it took from A to B, just to give me an idea of what to expect on my C to D leg. It doesn't mirror it exactly, but when you have three variables like the number of candles on the A to B, amount of pips on the A to B, and also the number of days that it took from A to reach at B. With this data itself, I can have a rough idea on by when I can actually hit this. So this would actually be the 20th, I think the 18th, close to the 20th day as well. So that matched with the 20 days here of A to B. So that basically gives me an idea how long I need to wait, or whether or not it's worth for me to actually wait that long. So you guys can ask the questions yourself on whether or not you want to take that trade and wait that long for that little number of pips, and also to risk that amount of pips. So it all will pay off if you are riding the trend really strongly. Okay, so that is CHF JPY. Now, with gold, we are doing quite well with gold as well. I have already started my trading on the buy, basically, as I've shared with you guys on this whole blue area. This blue area, as you can see, starting from This blue zone is your blue buying zone, is your blue trading zone. It started at 1808.45. So I have started my personal trading at 1808.45, if I'm not mistaken, and it has actually done really well. So all these numbers that you can see right here, 1823.61, 1837.03, and all that are all take profit areas. So these are all take profit areas. It has already hit 1823.61 as your first TP, and also the second one, which is 1837.03. So we've got third, fourth, fifth, and sixth TPs to actually hit. So four more to go, two is down and four more to go. So I've evaluated this whole area right here based on this candle, but not only on this mother candle itself. I've looked at various other factors as well, but then I need to monitor the news and what's happening in the US as well with regards to its macro and microeconomic factor, its yields and situation with Corona, various other things in the States, also globally, especially with the Corona. Is the Corona situation getting worse in terms of a global pandemic, coming into the global pandemic scenario? If that is the case, then we are seeing more possibility of going upwards. But then every line that I've laid out has been carefully evaluated based on all the risk element as well of where, if it goes up, it can actually come down and things like that. So when I have actually laid out numbers like this in terms of your take profit points, all you need to do is to enter at any moment of time that you want and as you can, and just take profit at that numbers that I've actually given you here. And then you can enter again after you've closed that trade on a profit, take profit, then you just enter again at any moment of time, because this is gold that we are trading, so we don't really have the rules of entry in terms of psychological numbers. But then it's already been evaluated that you've got that area there that you can buy at any moment of time, because I've evaluated all the risk element on the left. So then you can enter at any moment of time, but then you want to take profit just under the numbers that I've given you. So $1, $2, lower, it doesn't matter. So you've got let's say this one here, 1837. I've closed it at 1835, let's say, slightly earlier. So that's how I have actually traded it. These are all pending orders. They are all pending orders. So yes, when we say you can enter anytime, you pick your price of entry and then you put it as pending order, and then you use this TPs right here that I've given. Especially for gold, we are trading like this. Their entries are not based on psychological numbers, but for Forex pairs, I strictly enter with psychological number, exit with psychological numbers as well. But with gold, we enter using price action, candles to the left, various other factors as well. And then same thing with the take profit as well. So, but then the stop loss has to be, you yourself, you want a 1-to-1 ratio, you want a 1-to-2 ratio, that has to be entirely your personal decision. Okay. All right. So that's basically it. So we are still riding on gold. Gold is looking quite good at the moment. We are on a weekly chart, but then if you go on to the 4-hour chart, let's say, then you're looking at okay. So 4-hour chart, you can actually see that whole progress of the candles, and you can see that the progress of candles have been initiated by bullish mother candles as well. So that's a good sign, and then you can see more further ones coming up. Okay, so that's for gold, and I just want to keep it here on the weekly chart right there. Okay, we'll just evaluate a few more. We've got a very nice sharp pattern. I would say more a Z-type pattern for now. I'll keep it like this on the Z pattern. So I'm expecting the USD Chf, this is on a daily chart, to actually fall. That's my trading area right there. Even though, I'm expecting it to fall right here, but I have respected some bullish and some bearish candle. And you see that there is a very a big significant mother candle right there, which has no wick at the very bottom. That means the support is really strong. That was worth 125 pips. So I wanted to respect that that support area there at 8986 area, exactly at the open price of that mother candle there. So here, for example, we are looking at still C. This is A here, B, C, and D. This is the lazy Z pattern. The lazy Z pattern usually makes the upper mouth of a sharp pattern here. So this is this, if you see it as a whole, is a sharp pattern, and this particular sharp pattern is signaling to us the possibility of prices falling from C here right down to the D, but then further down than D. If you look at it as a Z pattern, then you've got a limit right here, and then it will actually go up first and maybe come down a little bit later. So a reversal is expected here at the, and that actually coincidentally mirrors the opening price of a mother candle as well at 89.50 exactly. So 89.50 is also your psychological level. So I was expecting it to actually fall to come down here and then reverse, but I don't want to get overly excited. So my take profit or my trading area was at this blue zone here, selling it last week onwards. And then this is for USD CHF. And that one there going down, oops, give me a second. So that one was starting at 90.35, or you can sell at 90.30 and then bring it all the way down here. It's about 40 pips or so, 43 or 44 pips. And it was expected to land 89 at 89.92 area. So yes, you can take profit at 89.93 if you want. So that gives you some pips there, about 40 pips, maybe not 39 pips or so, but there's still something there. So that's been positive there. So more selling pressure for USD CHF potentially only after it comes under this area. So under this area, I would think that I wouldn't actually start selling again until it goes lower, until it reaches the 89.70 89.70 area. Then it can trigger my other sell for me to actually take profit at the before the 89.20 area. So what I can actually do is take profit, entry for USD CHF pending order. You can do a pending order right now for a sell at 89.70, 0.8970. You can sell for USD CHF. If the trend persists and more weakness of the dollar against the Swiss franc, then you can actually take profit at 89.30 perhaps. No, that's too low. Give me a second, something's not right. All the way down here is about 58 pips. So you can take profit at 89.30. Okay, so 89.70 sell, pending order, we're talking about sell, yeah. So 89.70 pending order sell, and then 89.40, 89.30 take profit. So you've got your 40 pips right there. Okay, we're following that, but that is only if it persists. So that is still a risk, but there is a chance for it to actually follow through this pattern as well. So we want to be careful with that, because if we're trading the Z pattern here, there's a chance for it to reverse here. But if the trend is really strong to pull it down, then you are looking at taking profit at 89.30 area. So that's hence the reason I wanted to take it earlier here and then leave the market to help us decide whether or not it would prefer to actually go down a lot more. So that's USD CHF. Okay, so we have taken a look at CHF JPY already. NZD JPY. Okay, a second. So NZD JPY, I'm still waiting for it to actually come down a lot more. So waiting for the reversal and for it to trigger the entry point, the centroid area, which is still very far away, I would think. 7110 area only, then I will actually enter, but at the moment it is still about 100 plus pips away. So whether or not this would actually be a reversal and then start coming down or not, we don't know. But I'm expecting more NZD weakness, but not just now, because USD is the one getting weaker, if I'm not mistaken, at this moment of time. So we may see some more bullish movement for the gold section. So NZD USD for now, you can actually relax with it, not to actually pay a lot of attention to NZD USD. The entry point is too far, 150 plus pips away. So we don't want to pay any attention NZD USD. There is no significant hints from the heat from the market heat map as well that actually gives us any hint that we should be taking should be paying focus onto the NZD USD. The market has hinted us through the tools that we have seen for GBP and JPY pairs for today, and whether or not it'll carry on for the whole week, we don't know that yet, because we need to monitor that on a day-to-day basis. Okay, so USD JPY, it's looking not too bad, but again, it is actually still marinating the price, not really giving a very clear indication, but it's probably already triggered the sell entry at 108.40. But then 108.10, you can actually take profit, but still too early. So for those who wants to do a pending order as well, maybe not just yet, because it's quite far away in terms of the price. So if you are looking at the market, and the market is like 20 pips away or something like that, then you can do that pending order straight away if you look at it. But if it is like too far away and it's 100 plus pips away and stuff like that, maybe not, because it might take some time. Okay, all right. So one of the best trades as well as of last week, very volatile, but then it went really well for our oil traders. So oil traders are really happy. Oil traders and commodities traders, they have actually been benefiting from this pattern as well in the market, trading at the centroid area all the way up here. Centroid area was at the 60, I would say about $63 or so, but then now it's already 65, almost 66. It's actually gone up to 66 plus, and it was quite good. So they were very happy. But at the moment of time, we just want to lay low a little bit, look at what Canadian dollar is also up to, and look at any news with regards to go to oil. So now here we've got a very nice pattern on GBP USD. So this is the first pair that I want to look at as well. I've drawn a geometric bullish ABCD pattern. I've also laid out very nicely all these areas that you can actually trade in black. So the black zone area, the one that is unshaded, is your trading area. Okay, so we have a trigger there earlier at 1.4010 area, and we are aiming the price at this one right here, 140. So 1.4040, I think I've already exited on that one. That was about 50 pips, let's say, or maybe slightly less, maybe about 45 to 48 pips or so. So that has already done. But then we are seeing a potential, if the market persists as of today really well. This is on a daily chart. You've got another opportunity right there for the buy. So the buy pending order for GBP USD is at 1.4090 area. So you can actually start your buy pending order again, please. Pending order buy 1.4090, and then your take profit is under your 4135 area. So maybe 32, 1.4132 or 1.4134, you can take profit there. So if it is 1.4130, let's say, and you want to take profit there, then your entry is at 40990, let's say, right? That is about 42 pips. Anyway, so that is trading the tip area of that C to D move. Okay, so that is an area that you want to also be careful. You see, you've got that very powerful, significant drop reflected by the resistant area right there. So this is for GBP USD as of now. Now, as you guys have noticed, I've done all my data collection and evaluated the market on daily, weekly, monthly, but it doesn't mean that I'm trading on a daily, weekly, monthly style, meaning leave it long for months and months. No, it doesn't. I'm just using the data for daily, weekly, and monthly to actually help traders trade at any moment of time that they want. So, for example, if I am looking at an opportunity of ABCD going up on a daily chart, then I want to look at whether I've got opportunities of the same type pattern, but smaller pattern, maybe bullish ABCD pattern on your shorter time frame. So if you find that, then you trade following that pattern, okay, on the upside. So here, for example, just as an example, on the 1 hour, so 1 hour is your 30 minutes to 1 hour. Your 4 hour is your 1 hour to the 4 hours. Okay. So then here we have got your A here, and then B here, C, and then boom upwards as well. So if you look at shorter time frame, you've got your ABCD, same ABCD but smaller. So you want to look at a copy of the big mother pattern, and you want to look at it. Don't look for bearish pattern and trade bearish pattern, and you see a very nice bearish pattern that doesn't actually match the big pattern on a big time frame. You cannot do that. You can do that if you want to be confused in the market, but then in order for you to trade in a more systematic way, then you want to look at this big pattern that I've actually seen. It was on a weekly and daily chart, let's say, right? So that was the pattern on a daily chart. So that's considered a big pattern, because daily chart, weekly or monthly is your big pattern charts, and it's your big time frame. So then you need to look at similar type pattern, bullish ABCD again, but then lower time frame, then you trade there. So if I look at the 1 hour, and then I see that, yes, you've got some ABCD, but not as nice as the 30 minutes. So the 30 minutes give you more clarity visually, let's say, right? So you see this one here, A here, B here, C here, boom, D, right? So then here you've got a chance, and you just have to measure your A all the way up. Oh, a second. All the way to B, and that gives you a very nice 50% Fibonacci ratio. That your C point has to be a minimum of 38.2 anyway. So then you draw your pattern, you enlarge the pattern here, you zoom in, okay, and then you look at where you can trade based on the 30 minutes, and you can see that it's exactly on the area that we have aimed for as well. Okay, so 40.70, you need to exit at 40.70 on that one. So if it is based on the 30 minutes chart, and you want to trade based on the 30-minute chart at the time, and you found this pattern, so you can actually carry on drawing it, and you can actually manually draw your A to B, or can copy paste to the C to D, and just do it this way. And exactly like how you have drawn the big pattern on the big time frame. So it's exactly the same. So your buying was around here. Let's say the centroid area was given to you at 40.28. So 40.28, and then you have got maybe you can trade at 40.28, or better still 40.30, let's say, roughly, yeah. And then all the way up here, that's already about 39 pips or so. So you want to exit at 40.70, right? So 40.70 give you exactly 40 pips. So that's 40 pips already there, even on the 30 minutes chart. So this is how you want to mirror the pattern that you see on a big time frame, a big pattern. Then you want to mirror that on a smaller time frame, and you trade based on that smaller time frame, but a mirrored pattern. Okay, hope that makes sense. You guys all okay? All right, good. So that's basically it for GBP USD for now, but I am sure that we will see, as the days go by, as more powerful economic data releases comes up, then you will have more opportunities on there. So let's look at other pairs. Okay, we can also monitor the Euro USD, we can see that we've got the Euro USD right here. If gold were to be, is seen to be stronger, that actually means the dollar is getting, weaker or trading lower. So that might give us a hint that the euro might be pumping up. So if the euro is pumping up, we've got a trading area right here, but it's a little bit far away, if I'm not mistaken. Let's just check. It's from here to the area, not far away, sorry, it's about 30 plus pips from this area right here, but there is an area here which is 1.2190 onwards, and then you can trade it for about 40 plus pips and exit at perhaps 2010 would probably be better. That's about 20 pips, I think you can have, but it's a little bit too rushed up for this opportunity for Euro USD. So I would advise maybe not to look at Euro USD for now, but to actually grab opportunities if they are on GBP crosses. So let's look at GBP NZD now. So I've got GBP NZD here. We'll look into GBP USD, GBP NZD. Most of the GBP pairs, I would think, would be better to look at today. So GBP JPY for sure. I want to look at that. Okay, so GBP JPY first. Let's take a look at GBP JPY. It looks nice on the daily chart. It is, most traders, they just eye on the single candle moving and then they say it's uptrend. So this is very risky to do that. Always look at the current candle, look at the current price as well. As I can see, I want to look at it from a risk perspective first. So if I look at it, it's really nice to see that the GBP JPY is definitely going up. CHF hit its TP, great. Thank you, Alfred, for that. So that's good. Well done to you guys who have actually hit all 4 TP. So that is 120 pips on CHF JPY has been actually hit. So it took about 20 plus days to actually wait for 120 pips. That's on a pending order. So that was quite a good trade, I would think, and it's quite a stress relief type trade. If you're not monitoring it, if you're monitoring it, it can create some stress. But then if you are preparing, you have prepared yourself to actually pick the right pair from the liquidity and volatility perspective, and also trend as it builds up, then you have less to worry about, especially if you have got your stop loss already ready and you just need to monitor it as and when you want and leave it to run. So let your profits run. That's what it means actually. But then it does also mean that you can let your profit run if you have done your proper preparation, and you have actually analyzed it well and you have actually done it well, then it's still a probability game, but you are more on a higher probability, low risk trade. So now here, let's talk about GBP JPY. GBP JPY, as we can see on the daily chart straight away, it's on the upside. It's above all 3 EMA lines, which is great, but we cannot get overly excited. As we look to the left and we look to the right, like crossing the busy highway of the foreign exchange market, we can see that it is really close to the 153.20 psychological level. On the upside, it will be bumping into the 153.50 psychological level. So I think the best thing to do is to lay out the risk ahead of you at 153.50. Okay, psychological level, just to know that that is where it could potentially reverse as well. And then the psychological level under 153, the 153.27, which is the current price now, as it goes lower, it would hit the 153, it would bump into the 153.20 psychological number. So now I've got a kind of zone right here. So what I'll do is I'll also just put it as 15300 psychological number. So then I like to make the current price right in the middle of 2 psychological numbers. So give me a better visual reporting of the market, much better. A visual report of price action would actually be much better. So that is a sort of no trading zone, but I'll mark it as your in red as your resistance zone. So here we've got a resistance zone right here, right? So for those traders who are looking at GBP JPY right now on 5 minutes, let's say, if they're not scalping, but they are trying to trade it based on the trend, they go to 5 minutes, they go to 15 minutes, 30 minutes, or 1 hour, they get totally excited and they don't want to leave that trade, and they think or guess that it will go higher. But then when we get more data from higher time frame, we then know that this is hinting us that, you know, you've got to watch out because it might just reverse. This is also a cup and handle pattern roughly, so it might be due to reverse at the mouth of the cup, come down at about 50% or so. So if I were to pull this one down here from the top to the bottom here, I can mark the 50%, let's say around here. So what that means is roughly, just as a general evaluation, it could potentially reverse at any time now and then fall right down to this level right here, okay, which is 15120 psychological level exactly. But then what I would actually do is I would take that sell, if I were to take that sell order, then I will wait until it breaks out from 15300 area. So 15290 would probably be, this is if you want to anti-trend trade and following that, if you want to trade the reversal as well, then you can actually trade the reversal and sell at 15290, right? So 15290 is your selling price, let's say around there, and then you want to take profit the closing of this mother candle right here at 15165, let's say. And that's actually a very big fall. That's actually about 125 pips fall, but then I would think that it would actually fall a little bit less than that, maybe about 90, maybe about 95 pips or so. It could actually fall down to 15190 area. So that's where I guess it could potentially fall. So I want to also have this area here to say that this is your support zone potentially. Maybe you're expecting a rise here, but then a fall for now and come down to this area right here for GBP JPY, but it's probably going to be only a correction in a way. So we want more GBP news to push GBP crosses up so that we can trade many GBP crosses on a buy, but then also meantime on a sell too if you are actually trading reversals. So here, for example, I want to lay that out in blue so I know that this is my support zone right here. So I've got my support zone all the way. There you go. So now I have got that black zone area. So it was a fall, it was a rise of price from the blue zone right up to the red zone, and then a fall, then an up. So the next one is a down in within that black C area. So the black C area will give you a selling opportunity for now in the short term once it reverses. And this is a nice, potentially a cup and handle pattern. If this is a peak, cup and handle pattern might signal more fall, but we don't know that yet. So we want it to, if it only will signal more fall if it goes beyond the handle area and comes down lower and lower, and then after it goes down under the base of this cup, go lower down, then that's a change of trend. But if not, it will create the handle, then go back up, break out from this red zone, go back up a little bit, and then maybe return here, and then boom, it'll go up as much as the base and the base of the cup to the mouth of the cup. That's 400 plus pips potential. If at all it goes up here and it just goes beyond this red zone, then you've got 400 plus pips. But until when, we don't know that yet. How long would it take? We don't know that yet, but we do have some power of mother candles in that area. So we've got mother candle right there. So this is quite good. We've got a mother candle that actually stops there. So from the mouth of the cup, just measuring that mother candle itself is about 700 plus pips, but we only need about 400 plus pips once it goes up to that area. So it is possible. We've got 700 plus pips worth of candle on standby, but we only need 400 plus from there. So it is more a higher probability after it has actually gone above that area, we may be able to make 400 plus pips. But I would think maybe to layer that trade down, we may only make about 300 pips maybe plus, because we want to layer that out and trade in section and section and section, just if that is the way that you guys would like to trade as well, just to keep it a little safer, a little bit more risk manageable as well. Okay, so that's GBP JPY. Any questions at all? Clear on the GBP JPY, GBP USD? Now we'll go back and look at the GBP NZD. We need to look at the GBP CAD as well. So, okay. The GBP NZD, I'm not that particularly interested in as of now. I have made an experimental buy order for myself, but then it's just an experiment, just a small amount there, but that's way above here. So what I see as a potential buying zone is following this mother candle right here, right? From the start to the finish. So this is the buying zone, and we are a little bit away from that, or hasn't reached that area yet. So we are about 50 plus pips, almost 60 pips away from entering that buying zone area. So once it have actually entered that buy zone area, then we can plan further for GBP NZD. As of now, it's a little bit too early, I think, because it could do one or two things. It could enter there, and then you've got more buying pressure for GBP, or GBP could actually reverse and then find that support area right here as a resistance and come down first before it goes up more. So I need to monitor and look at how well it actually respects all these area of resistance and support as well, before I plan further. So I need to wait until it enters price for GBP NZD enters this blue zone area. So the blue zone area starts at 1.9356. So it's really close to 93.50 psychological level. So once it goes above 93.60 area or so, then I know that it might actually want to pick up much more. But I need to also look at this area of resistance, this area of resistance, this area of resistance as well, because then you can layer your trade up. Once it enters this zone, you can use all this resistance area as your layering, and then you adjust it with your psychological level as well for the buy order, okay, for GBP NZD. So as of now, let's look at GBP CAD first. Oops. GBP CAD. GBP JPY, we've taken a look. CAD JPY, not that interested with CAD JPY at this moment of time. I am focusing on GBP pairs as of now, because that's what the market is focusing on, in my opinion. So let's look at that, because a lot of trade might actually be triggering as well, a lot of patterns as well, because of the liquidity and volatility amount on GBP crosses at this moment of time. Okay, so observing it, let's say now I just look at it. I've got no rule of really looking at it based on the daily first or the weekly first. Anything that I feel like on a especially on a higher time frame. It could be first time looking at it on a daily chart, a weekly chart, monthly chart, doesn't really matter. But since it's already on my chart on the weekly for GBP CAD, then I can see that I would notice this area right here. This is actually sort of like a not a pin bar type pattern, more like a dodgy type pattern, maybe, but because it's got a little body right there. But this kind of candle usually signals a bit of reversal. So there may be a reversal view on GBP CAD. So that means it has actually gone down, and now it is looking at a reversal to the upside of prices. So and it's actually picking up. It's picking up quite well in terms of a bullish run for GBP CAD, mainly because we could visually see that the size of the candle is really small visually, but then it's a weekly chart. So weekly chart, let's say from the start of the candle right here to the area right there, it's already 50 plus pips. It's about 50 pips or so. So when we look to the left, we've got mother candles here. It could close right here as well. but then maybe close a little bit earlier right here, because this is opening of a bullish candle, may actually be closing price right there. We've got this area to look out for, that area to look out for. So if I were to look at certain area, it sort of giving me the hint that it could be around this area, because it's actually supporting a lot of resistant candles as well. So then a resistant area or level, so 17156, and it coincidentally at the 17150 psychological level. So I would adjust that price 7140 to actually be your take profit if you are buying already, or you're thinking of buying very soon. Probably your entry price should be at 7030, because now the current price is very close to the 1.7020 psychological number. It is at 1.7018 or 19, so just 1 or 2 pips away from the psychological number of 7020. So you want to buy at 10 pips above 7020, which is 7030. So 7030 should actually be a potential buying level that you can enter. So 7030, right? So 7030 right there. So you've got 7030 right there, and then you've got this area at 7140. So it's quite a significant area. It's 100 pips or so potential for you to look at. And what I can see is that we've got an up candle there and then down candle here. So now it's due for an up candle anyway to touch that red line above. So it's a potential, and we're looking at the market at the moment. GBP as well is looking quite strong and steady on the upside. We double check that again with the heat map. Give me a second. Heat map now, for example, is giving us a very good signal with 2 arrows on GBP JPY. So GBP JPY is definitely giving you a high probability signal to the upside. But you know, this is a signal on trend clarity, on market volatility and market liquidity. So that is why it doesn't give you where you need to enter and stuff like that. But it's more reliable this way, because the signals that give you all these entries and exit, in my opinion, it can change at any moment of time. So it's better if we are getting signals on the market liquidity, market volatility side of it, and then we plan our own entry and exit based on proper price action. Then you would actually be getting more consistent and more accurate in your trading, especially on your take profiting in terms of exiting the market at the right time. So here, for example, we've got GBP JPY already giving you that very good signal. GBP AUD as well, not too bad. But then in terms of volume, really high as well as GBP JPY. So if we look at GBP JPY, so you've got it there. It's already, you know, touched that really quick as well on that area. So that was already taken. So now we are eyeing for whether or not all the data of Wednesday and all that and everything else would actually push GBP up much more. If it does, then we are seeing lots of very beautiful opportunity on the buy side beyond and above that red zone that I have mentioned about. So for GBP JPY, it is beyond and above 153.50 psychological level. So your planning of trading for GBP JPY should only start at 153.60 and above. So 153.60 could be your potential buy price, but then we need to monitor until it breaks out. Then we can actually start to have layerings on there and then plan it on a bigger term, because I see that there may be ABCD patterns as well on shorter time frame. So I just want to make sure that I can have several patterns to actually back me up as well, back traders up, so then we can ride on it really nicely, because we've got a potential A here, potential B right there. Or perhaps we take it a bit lower or higher. But if we take it like that, it is a minimum of 38.2. So this does actually take us above to that level right there, which is, this is on a 4-hour chart, roughly 154.20 area. So 154.10 to the point of breakout, that's about 60 pips to make. There is a potential 60 pips or so to make there, maybe a little bit less than 60 pips, but that's beyond the rate zone. At this moment of time, it's risky to put any trades on, mainly because it's within the reversal zone for GBP JPY. Okay, GBP CAT, we go back. So now 1.7030 is your entry. You can do a pending order on that one there, and then your take profit is 7135 would probably be better. But then we can always monitor and look a little bit deeper of where it could actually be safer to get out as well. 70-30 and 70-90. 90-30, 60 pips. You can actually make your first 60 pips as well. So not to actually aim it too high, but then to actually take to enter at 7030. You can do a pending order 7030 for GBP CAT, and then you want to exit at 1.7090. So 90 minus 30, 60. So that's 30 pips potential profit there. Okay, so that's for GBP CAT. All right, guys, I think that's basically it. Let's just also very quickly look into, we've seen USD Chf. Yeah, that's the one with the Z pattern that could potentially be a sharp pattern as well. For USD CAD, it's looking reasonably bearish, but I've pointed this out as well in my previous webinar that it is actually approaching this area right here, which is a very significant support at 12059 area, 12069 area, sorry. So that is basically mirrored by this area as well as this area of support previously, and it's quite significant support, especially this one here, and it's approaching that area. So maybe, just maybe, potentially it's a reversal due for USD CAD. So this one here a little bit tricky. I would think it's probably best to look into GBP pairs as well for now. Okay, so we can go back to some pairs that we have, I've maybe missed. GBP and ZD, we've taken a look. GBP AUD, taken a look. Here's JPY. Okay, let's take a look at gold. Basically, we've taken a look a little bit on gold, but we can always revisit a little bit on gold. Okay, so yeah, I think gold has already been covered, but yeah, I guess you are clear now, most of the traders, with all the take profit areas. So again, just as a reminder for gold, we can enter any moment of time. If I have drawn that support area, support zone, in within the support zone, a nice area that I've given the take profits as well. It could be a red in color for selling, resistance zone for your selling, and buying is in blue basically. And then you've got a layout of all this area that you can take profit as well. Okay, good. So yeah, I think I've covered a little bit, and with that, I would like to end the session for today. But meantime, for any questions at all, you guys can visit us at the Bretton Financial Trading Academy Facebook page. You can write comments, you can ask questions there, or join my group at gtig.t.i or Bretton group in our Telegram. So yes, for that, you guys can always inquire in the Facebook page as well and get the link from us there. Okay. Okay. All right, guys. With that, I want to thank you guys for your time. Have a great pipping week, and we'll see you guys again on Wednesday on the Bretton's midweek review. Okay, so with that, wishing you guys great pipping, happy geometric pipping, and we'll see you guys again on Wednesday. Bye bye for now. Take care. Bye.